Hello, this is Myron Chamberlain with the Chamberlain Group at PrimeLending. We are a residential lender here based in Scottsdale, Arizona, and we love helping clients purchase and refinance their homes. What I want to give you today is my prediction as to where interest rates are going for 2023. It's the number one question people ask us, and they wonder about when they buy their home. What interest rate am I getting, and what do interest rates look like? I don't need to tell you that interest rates have been on a wild ride, more than we ever expected they would in 2022. They started the year at 3%, in August went up to 6%, back down to 5%, up to 7%, and they ended the year somewhere in the ballpark of the mid 6% range. A wild ride. I've never seen it in my 15 years before. I do believe the skies are a little bit brighter going into 2023. Starting the year, we saw interest rates come down almost 1%. They came down just a little bit below 6% for many loan programs at the beginning of 2023. In order to understand interest rates, you have to understand what they are. A mortgage is essentially a bond, which is a long-term investment instrument. If you think about it, if you took a mortgage out for $200,000 at 6%, you would be paying the bank back $200,000 plus 6% over 30 years. That is the exact same as a bond. The two factors that affect bonds, number one is inflation, and number two are recessionary fears that we have in the economy. In terms of inflation, last year interest rates moved so much because inflation went from a very modest level at the beginning of 2022 up to almost 7% in the middle of 2022. From a bank's perspective, if they have committed a loan to you at $200,000 at 6%, and let's say they're getting $1,200 over the next 30 years. If inflation starts going up, that means the bank has to pay their employees more, their electric more, their rent is more. All of their other expenses increase and go up because of inflation, but yet they're still receiving that same $1,200 over the next 30 years. So when there's concern of inflation and it increasing, mortgage rates always follow suit because banks know they have to receive more on their money to account for future expenses. And so that's why mortgage rates are so closely tied to inflation. The good news is the worst of inflation is behind us. Over the last 5 months, we've been seeing it coming down every month now, and the core inflation is now a little bit below 6%. I believe that over the next 3 to 4 months, we're going to see inflation come from the 5.5-ish% range that it is now back down to the 2 or 3% level. I think there is good reason to believe that, and once we see inflation at the 2 or 3% at the end of the second quarter of this year, sometime in June, interest rates are going to follow suit. I believe that the 30-year rate is going to settle down somewhere between 4.8 and 5.5%.